Good day, everybody. Happy Sunday. I am getting this video created quite later than I wanted to. Um, my goal is to try to get this video made for the Sunday video on Saturdays. I was just busy, so I'm going to try to keep today's a little bit quick, and then I'm going to try to force myself starting next week to actually create my Sunday video on Saturday so that I can release it early Sunday. So sorry I am getting this out a little bit late again, but my goal is to eventually have it released early on Sunday by the time everybody wakes up. And then you can kind of go about your day, take a look at some top setups I'm looking at, and see if that might be something that you might be interested in as well. And as always, guys, this is for, I guess you could say, entertainment, education purposes only. I'm not a financial planner, so take everything you see with a grain of salt. It's the typical disclaimer all of us, trading coaches and content creators on YouTube need to put out for our safety, okay, and yours. So just keep that in mind. My whole goal here is to just teach principles and show supply and demand zones, like what I like to trade, to give you some ideas. But again, always do your own due diligence on this stuff, no matter how good a trader is, or a coach, or a content creator. Because at the end of the day, we're not here to give you fish. We're just here to teach you how to fish. So with that in mind, let's take a look at the economic calendar for the week. We do not have anything, as you can see, coming up on Monday, but it's pretty much all packed in between the middle 3 days of the week. So Tuesday, we've got some inflation reports coming out for the U.S. dollar, guys. It does look like we're projected a 0.1% increase on the core number. And then as far as the month-over-month, year-over-year regular numbers, as you can see right here, looks like we're projected to stay the same. So as always, treat these report releases like you do the weatherman, okay, the meteorologist, whom quite often do get those numbers wrong. Okay, so always keep that in mind. This is just nothing more than a basic gauge to understand what the economists are thinking, but quite often these numbers are different. But yeah, assuming that they get these numbers accurate, then yeah, it doesn't look like too big of a difference. I mean, the core number, 0.1%, that is a little bit of an increase, obviously. So that could potentially be a little bit of a spike for the U.S. dollar, to the positive side. And then on the opposite side for the stock market, that would obviously be a negative number. So that's all we get for Tuesday. And I'm just showing you the red folder events, okay? And then as far as Wednesday goes, more numbers for the U.S. dollar. Got the producer price index coming out. Doesn't look like we have the previous number up there, but they are forecasted for a 0.2% increase on the core number. And then when it comes to the core retail sales, okay, they're projecting to keep that the same. PPI don't have the previous number on here, but they are projecting a 0.3 for the month-over-month number. And then finally, for the regular retail sales for the U.S. dollar, they're projecting a 0.4% increase. So that would obviously be good for the U.S. dollar as well, and the stock market, okay, if that number rings true. So that's your Wednesday number, the hump day number. And then finishing off is your Thursday number, GDP for the GBP. Okay, say that 10 times fast. GDP for the GBP. See how well you do with that. But yeah, their number is supposed to come out at a 0 right on the dot. Previous report was a minus 0.1%. So that could be a very slight benefit to the British pound if that number does ring true, or even obviously increases. It comes out a little hotter than that. That would be nice. I'm sure the Brits would like that. Okay, see that their economy is spitting away, at least on one report, fairly decent, because I think it's been a little bit on the light side for them overall. Let's go take a look over here at the British pound. I'm actually kind of curious. UK, there we are. Yeah, this is why, guys. Look at this. Zeros all over the board. Okay, I mean, it's just not been good for the British pound. 0, 0, 0. They have one neutral report for their unemployment rate where they did nail that number. And that's a little bit on the higher side. It's not too crazy, kind of like Canada's is, but 5% is 5%. That's 5% of people in Great Britain that would like to be working and making some money. Okay, so just take a look at that. I mean, everything else has been bearish. Everything else has missed the mark on there. Okay, your growth metrics, your PMIs, your inflation data. Okay, not a very good sign when you're just looking at the just the straight up fundamental analysis for the pound sterling. Okay. So yeah, any welcome news that they could get this week from this GDP report would definitely be a godsend if they could get it. But yeah, even at that, if they do get the 0%, it's only a 0.1% increase, and it's still at zero. Most importantly, right? So I'm sure they're wishing for better times over there, and that's all they get this week as far as a potential reprieve is that GDP. So that's it. And then the dollar, we get our weekly unemployment claims number, previous number 208,000. So they're projecting 2,000 more on the unemployment claims. So that would definitely be a little bit very, very slightly negative. I mean, albeit it's only 2,000 job difference when you're talking a 200,000 number. So it's not like it's anything too stupid, too crazy, too ridiculous. Okay. We could definitely use some help in the jobs numbers. That is for sure over here in the U.S. When it comes to all the jobs data, because they just have not been looking great at all. On that note, let's take a look over here at the U.S. dollar. Okay, this is the last week. All these yellow dates that you see, this is anything that was released within the last 7 days on the Edge Finder. Okay, and as always, guys, you can find the Edge Finder at a1trading.com. It is nice to be able to finally be able to advertise that for my buddy Trader Nick over there. Now that I'm out on my own and going solo, so a1trading.com. You guys, if you are wanting to understand fundamental analysis and sentiment analysis, the things that really move the markets, you have absolutely got to give this thing a look. I've been using it for a year, and it has completely changed my trading for the absolute better. So a little bit of a plug on that for you, Nick, as this tool is just awesome. I dream about this thing at night. Okay, it's that exciting. So anyway, I digress. Again, looking at the dates over here, these are within the last 7 calendar days for all of these job numbers. And when it comes to, and it basically was kind of split down the middle. The JOLTS job numbers down to 7.15 million. Okay, this number's been going down quite a bit when you take a look at a graph over the last, I don't know, couple years or so. It's just not been looking the greatest. So it's just been on a sluggish, steady downtrend. So that's not a great number. The ADP numbers, as you see there, they did also miss forecast by 8,000 as well. This one's been going down. It's just not looking too great, guys. The job numbers over here aren't looking the greatest. Thank God we've got some positive numbers up in the growth. The growth numbers, I mean, just kind of helping to balance this thing out. Because jobs sure ain't doing it. Non-farm payroll, likewise, guys, that's the account killer I mentioned to you guys last week. As you can see there, we missed on that number as well. So, the saving grace was our unemployment rate was only 0.1. Well, it was 0.1% decline. So that's obviously good. Okay. Jobless claims, couple thousand less than the projected 210,000. And it was also higher than the previous number. So there's your little bit of a reprieve for the U.S. dollar from last week was those two rather bullish reports. And then the wage growth number, guys, this is what you want to take a look at when you're comparing it to the inflation rate. Okay. So as you can see there, 0.2% increase on that number. And it's much higher than the inflation rate itself. So, inflation sucks, but when you factor in the wage growth, it's higher. So that's good. That's net gain. Okay, so that's one way that's the way to really look at that. But anyway, you add everything together, and then not to mention the PMI data that we had. Okay, we were bearish on the manufacturing sector, but we were bullish on the services sector, which I think is much more important anyway, because you're talking all the big, the big companies, the big tech companies. Aren't they the ones that are kind of inadvertently running the country as far as money and everything else? So I like that number is at least looking really sexy, and it is a 54.4 against the forecast of 52.2. So that was a really, really good number. Okay, and then again. Just a slight dip on the manufacturing sector. So that's your U.S. dollar. You add it all up, it's about a 42%. Expectations have been exceeded, so not great, but not just not horrible either. This number starts getting under 40%. That's when we got a little bit of issues on our hands. So currently, a little bit on the neutral to slightly bearish side for the US dollar when you're looking at everything as a whole. Not only that, guys, but when we're talking about the Dixie, okay, get this reconnected over here. And this is what I put on my shorts video on Friday. So the Dixie is actually currently sitting inside of this daily supply zone right here. Now, there's a 4-hour supply zone inside, which is this rectangle here. And as you can see, it's actually kind of poked through it. It poked through it, but it actually got slammed back downwards and ended up closing underneath. So it's going to be interesting to see if the net negative data for the U.S. couples with these supply zones and then just turns around and pushes the Dixie downward. I mean, that's something that I would not be surprised about at all. If you wanted to look at a potential saving grace on this, you could see that it has actually created some new higher highs. And you could look at this as a new higher low as well. So even if this is the case where the Dixie is starting to turn around, I would still expect some type of a retracement on this thing. I mean, maybe you get down into this little bit of a 4-hour demand zone down here like this before bouncing back up. But I would not be surprised if we had that. So if I were to redraw that, just showing that example, maybe we get a pullback down before an eventual push back up. But even if that's the case, you still do have a decline, do you not? So yeah, we'll see how that goes. I am in an Aussie US dollar long position, so that's what I'm hoping for anyway, is that we do, excuse me, continue to get some weaker reaction from the dollar. Excuse me, just so that so my trade works out. I'll show you my trade real quick over here. Let me just flip over to the Aussie dollar. So this is a trade that I am in. I got into it Friday and I left it open over the weekend. So what we had was, if you look at this thing on a 4-hour time frame, if you look at this on a daily time frame, we've got higher highs and higher lows. So as always, guys, my favorite demand zones are the daily 4-hour confluence, like what we have right here as an example. Now this is a little deeper down, and then you see we got another one down here. So if I go to a 4-hour, okay, the demand zone will be the green box. Okay, that's my favorite confluence. Where we are right now is pretty high on the curve if we're looking at this swing low to the most recent swing high. So I do acknowledge that. So that's why I didn't put in a very big position on my risk, okay? Because you drop down to, because you don't have the daily confluence. Okay? You don't have a daily demand zone in this area. All you have to start with is this 4-hour zone here. Okay, it's kind of a doji candle, if you will, maybe a little bit on the fat side of the doji. But from this point in time, price had a really strong leg out, as you see right there, with some volume spread analysis spikes. And it eventually broke these highs over here, break a structure, okay? So it broke that structure and went clear up here. So I'm basically just looking for a retracement like we got. And then from this 4-hour, I dropped down to a 1-hour. And you'll see that I've got a beautiful 1-hour demand zone inside of the 4-hour right there, okay? Take a look at this thing. This is nice. Just as strong of a rejection candle as you can get. Okay, close at pretty much almost to the top of the range of that candle, and then the next 3 candles just flew upwards, which is what helped to break that structure over here to the left. The VSA kind of picked up as well there on the 1-hour time frame. So this was my entry. Okay, this was my entry over here. Just basically waited for it. Now it hit the 4-hour and then kind of went sideways for about a day or so, maybe a little less than a day. With this wick here, but again, I'm more interested in the confluence. So, 4-hour to 1-hour, I wanted to touch my 1-hour, and that's what we got. So, looking at this 1-hour time frame, I'm going to flip it down to a 15-minute just to give you a little bit of a look here. So we hit the demand zone on the 4-hour, okay, and well, back over here, as you can see, it broke some structures, but this was not my entry because I needed to wait for it to hit the 1-hour demand to get those 1-hour zone traders, engaged. They're not engaged up here because it hasn't hit the 1-hour demand yet. So price ends up coming down, and as you can see, this is the first place it touched the 1-hour zone. Went sideways there for a while, and then here's what happened. So when price dipped a little deeper into the 1-hour, it shot out like crazy and started breaking some of these structures right here. So like there's a little bit of a structure here. Didn't quite get to this one here. But when it broke this one, and it also broke this one-time supply zone right here. Look at this. Okay, that was a supply zone at one time, and then but what happened? Well, price pushed above it. So break of structure, break of supply zone. Now all I need is a retracement. So at that point, we come down, and this box I darkened in. Okay, well, at one time I was looking at that on a let's see here, a 5-minute time frame, I think it was, 3 minutes, something like that. Okay, this is where I start getting into some smaller time frames. Hell, it might have been a 1 minute. Let's take a look at this box real quick. So here we go, guys. It's a 1 minute time frame, but is that not a demand zone candle with a gap above it with all this strong volume right here? That's what I was seeing, and that's why I decided to get into this trade. Yeah. So got in down here and just kind of left it open for the rest of the day on Friday, and decided to hold it over the weekend, guys. I know that might have been a little bit of risk, a little bit of chance, but at this point, we did open up today down here. We gapped down, so this is what I would refer to as a pro gap. If we're in an uptrend and price gaps below the close from the Friday, that's a pro gap. So pro gaps oftentimes get bought up when they're in confluence with the overall trend up. Okay, so yeah, I'm in this trade. We're going to see how this thing works out. I'm not going to do anything to it. Just going to let it do its thing. As far as potential roadblocks, okay, you guys see I do have this supply zone up here on a smaller time frame. What is that? A 5 minute? I think I put in. Take a look here. It's actually a little lower. Yeah, 3 minutes. Okay, look at this. So this is a 3 minute. Now, am I that worried about a 3 minute supply zone, knowing that it hit a 4-hour, 1-hour confluence? Nah, I'm not. But I still want to just watch because that was where some previous structures were broken. So that's, I guess you could say, a tiny, tiny little pebble. Okay, somebody could potentially walk over, but I don't look at that as a complete roadblock to turn around and push price all the way down. So really, I think the main one to start, making sure I'm locking in some gains is going to be this 4-hour supply zone overhead. So once we get up in this area, okay, that's where I'm going to definitely be making sure I'm at least at break even. Probably break even because that would be a little bit more than a 1. Probably a 2 to 1. Well, let me see. Let me just measure it. Okay, so here was my entry. Okay, stop loss. So we'll just call it 17 pips. Measuring up to here, so 1530. So that's about a 2 to 1. Okay, 2 to 1, 2 to 1 reward risk ratio just to get to this 4-hour supply zone. So absolutely, I'll be at break even, if not even moved up to a 0.5 to 1, or maybe even a 1 to 1 to lock in some gains by that point. Because yeah, you never know. Goal number one is always to eliminate risk. It's always goal number one: eliminate risk, so that you can sleep at night with a trade that you're leaving open overnight. Okay, and that's what I do. I typically am in trades 1 to 4 days, so I just want to try to eliminate my risk as best I can before we hit that supply zone. So that's it. That's the Aussie dollar trade. We'll just let her do its thing, and I've got that on my 2 challenge accounts as we speak. So we'll let it go. And then as far as top setups, real quick, very top of the list, we got the Euro Swiss sliding up there to take the overall spot. We don't have any real strong reasons to buy any indices right now. The U.S. indices, okay. China 50's up there, but again, guys, I don't have that in any of my platforms. So I always just ignore China 50 when I see it. But yeah, no NASDAQ, Dow, or S&P. There, a couple of them I think are at +4. Let's go take a look over here at my neutrals. So there you go, NASDAQ 4, Dow 4, and I think the S&P is down at like a 1 or something. Let's go look here. S&P, yeah, 0. Okay. The Germany DAX, it's at 1, so that's neutral. The Nikkei's at a 4, so I need another point of strength for it to get excited about it. And then the FTSE 100 over in the UK, guys, it's sitting at a 3. So yeah, this is first time in a while that none of the indices have been on the top setups. Okay, when we're looking at the fundamental and sentiment analysis. So there are some rather decent looking technical setups for the NASDAQ for sure. But until I get some more strength, okay, going, Until I get some more strength, I'm just not interested. But we can take a quick look at it. Okay, let's go over here to the NASI real quick. You see, I do have a demand zone a little deeper down. I think that was actually a 1 hour. So here we go, guys. We got a 1 hour demand zone all the way down here for the NASI, but again, I just need some more strength. I don't have any strength on it. So yeah, I still have an alert set because it's a very dynamic list. By the time price, potentially pulls back, it could give us some strength. So we'll see. It all just hinges on what some of these U.S. dollar reports, how they hit. I mean, for the NASDAQ idea, we would definitely want to see the inflation cool. That would be a nice welcome sign. Okay. And as well as some of these PPI numbers, and obviously have some more retail sales numbers. I mean, if you get more of those, even if you get one of those warm, okay, one of those reports exceed expectations, and then you have the rest at neutral, then that could potentially move it to a 5 or 6 or higher. So yeah, that'll be what I'm looking at on the indices for the week. Other than that, gold and silver still at the pretty much the top of the list. Silver and gold, okay, a little bit of risk off. Bitcoin's nowhere on the list; it's down to neutral. But yeah, that's going to be just like we've been saying all year. Gold, silver, man, it's been some good plays. So we might as well take a quick look at that over on the charts. And why does this thing keep disconnected on me? I don't know why it's doing that. Anyway, okay. So again, gold. Where are we at here? Okay, so again, silver is a +8, so that's pretty strong. Gold is a 7, it's right behind it. So let's just look at those two real quick. Gold, we're currently in a supply zone as we speak. Okay, so got to be careful up here. Now, I say we got to be careful, but that supply zone has already been hit. It's already been mitigated way back here after that leg out candle that we had just to create it. So I don't know if I'm too worried about it. As you can see, we had a really big gap up on market open here. Let's drop to a 1 hour just for a minute. I just want to see what the top of that 4 hour supply zone looks like on a 1 hour. Okay. Yeah, I mean, you could pretty much look at that as your 1 hour supply. It was all the way at the bottom though. This 1 hour candle did not go to the top and get anywhere close to the top like this candle did here. So I don't know if I'm even worried about that, guys. I think we're going to bust through this. Okay. I think we're going to bust through that. So if we bust through that, then I'll basically look for a retracement. I mean, you see, I do have a 4 hour zone down here with an alert on it. Okay, right here. I got a lot of drawings in here, so sorry for that. But let's just turn those off for a second. There you go, guys. There's a 4 hour demand right there. Okay, strong leg out with my VSA painting up a yellow bar. I like that. And it eventually broke this structure over here. So got to keep an eye on this, return to this origin of the strong move up if we happen to get down here. But outside of that, do we have anything in this area here? Let's take a look at a 1 hour. Okay. As far as a 1 hour goes, not really. Volume really started drying out after this red candle here. This would have looked like a decent zone. The problem is it's already touched right there. Just that little bit of wick in that overlapped this wick here is enough for me to ignore that. And not to mention, guys, if we're looking at this on a 1 hour time frame and you look to the left, there's like 10 candles there. That's way too many candles for me. I want price to come down, okay, and just spend a little bit of time there before it moves up. That was a terrible drawing, Tiger. But let's, something like this over here as an example. Okay, look at this. This was a 2 hour demand over here. Okay, right here. So that was one candle. So you had a leg in, then you had a one candle of basing action, and then you had the leg out. That's what I like to see. And this is why, because what happens? Price comes down to those rather compact demand zones or supply zone if it were flipped around. And as you can see, just wicks in there nicely and takes off. It doesn't like to do it as well when you have a whole bunch of candles there. If it's just 1, 2, 3 candles max, those are my favorite zones. Okay, and this is why, because it tends to get some pretty good bounces off of. And obviously it depends on the context of the fundamentals, the sentiment, the whole 9 yards. Okay, what side of the bed I wake up on as well. Don't forget that. So anyway, as far as gold goes, yeah, I don't want to do anything right here until I get some more information. So just like this yellow line I drew up, okay, I want it to go above and close. Let's get this to a 4 hour chart, just like this. So let's come up here and close somewhere up here, and then we can return down to a demand zone, something like that. And this would be the entry for the long side. Okay. So that's really kind of a longer term play on gold. It might take a day, it might take 2 days, it could take a week. Hell, who knows, right? But either way, that's the point. I need it to come to me. I do not want to chase this price. I especially don't want to buy this price in premium. Okay. I want to wait for those crab legs to go on sale half off. That's why I'm waiting for a retracement to a demand, but only if it breaks that high and closes. Okay. On preferably a daily chart, 4-hour chart, maybe even on a smaller time frame. But I don't want to do anything right yet. And okay, so that's it. If this thing just slams down from here and comes into my zone without breaking and closing above that top, man, I don't know. I'd probably take the trade. It just, again, as always, guys, just lever down on the rids. That's definitely what I'd be doing. Okay, and then obviously if you keep on going, then the origin of the strong move up, okay, is going to be down here. But we have efficient market structure in there on the smaller time frames. That would really be the return to the origin. Well, I should say the higher time frame demand zone, which is 4 hours. So yeah, not really worth talking about this demand zone down here as of now. So we'll just end it on that. And then also silver, guys. Again, this one is getting a point stronger of a score on above the gold. So zoom out daily. Drawings are away. Drawings are gone. I don't really have any daily demand zones because this one kind of was at one point, but it's already been mitigated by this candle, right? So that's an efficient price action. I don't have any gaps. Remember, gaps are inefficiencies in the market, and big banks and institutions love tackling those gaps because they know that there's going to be unfilled orders typically inside of either a demand or a supply zone on the other side of that. So I can't use this as a daily, so I have to step down to a 4-hour. Okay. Now, at some point, this candle right here could potentially become a daily demand, but we can't use it because this candle has not broken and closed these structures. Okay. So I have to drop to a smaller time frame. So let's go to a 4-hour. Okay. So here's that same area, but on a 4-hour time frame, you can see I have an efficient market. I don't have any gaps right here. Okay. The first gap I have is actually right up here. Let's turn my drawings back on for a second. Okay, on a 4-hour, but that's too expensive for me on a 4-hour time frame. So just scrolling back out, I do have this same gap up, just like we had on gold. Okay, we got a gap down, a small gap. Now it retraced most of it. So and the volume isn't the strongest, but this is the first time I have a daily 4-hour confluence. Okay, it's already hit the daily, and as you can see, it's bounced up. It's gotten the reaction from the daily and kept going. So I don't know how much I really want to trust this area down here now, if and when it returns. So I may just be looking at something in this little bit of a leg here on a smaller time frame. You see, I do have an alert set right here. So that is a 4-hour. But again, has this 4-hour zone broken a structure yet? No, sure hasn't. That's why I've got this little box up here drawn. Okay, smaller time frame. This is a supply zone. So if I'm going to get excited about this demand zone here, and again, all this structure down here is efficient because laps or candle bodies overlap, candles to the left or right. So I can't use that unless I go to a smaller time frame, which is why you see those two green boxes there. But at the moment, since I'm looking at this in context of the 4-hour, I just need it to break this structure and preferably even this structure up here in order to get excited about a retracement back to this potential demand zone. So what's a 1-hour time frame? Let's divide 4 by 4, and what do we get? We get 1 hour, right? Okay. The origin of the overall strong move up. Now we've got a 1-hour demand zone. Okay. So if we're looking at this thing on a 1-hour time frame, okay, dropping down into some smaller time frames, which means there's noise. Okay, there's a little more noise down here. This would be a potential play, but it's a long ways away. So let's just divide 1 hour by 4 and come up with 15. Let's come down to a 15-minute time frame. Okay. Right here is a 15-minute candle with a tiny gap Not a lot to shake a stick at, but right next to it's another 15-minute demand. Let's zoom in on this. This is where I'm looking at currently. So you got a 15-minute demand zone candle, and then over here, you skip the leg out and you go to the next, consolidation. You got another 15-minute demand zone. So I am more interested in this one up here, even though it's not the origin of the strong move up. I just think that the volume looks a little bit better. The volume spread analysis, okay, the trading activity. So if I were to get into a trade here, I would not be putting my stop loss just below that 15-minute candle. I would take into account this 15-minute zone down here. It's basically a level on top of a level. And then I would put a stop loss below the whole thing, which is also the 4-hour. Okay. So that's just because of the fact that it is quite high up. I mean, it's, when we're looking at it in context of the 4-hour, is this not quite high? Okay. That's pretty high up. So I'm just gonna look at this thing potentially on this 15-minute time frame for a potential buy, because I do have some gaps here. Now again, they're not the sexiest thing, they're not the strongest looking gaps, but we got quite a bit of trading activity that happened in this area. And then so there's my alert there. And again, guys, we do have a gap up today so far, but zero volume. Okay, and that's normal. That's Friday's end of day, end of the intraday session volume. Quite light, not very exciting. So I'm going to wait for a potential retracement here and be very picky on making sure I get a bullish engulfing candle. Maybe on a 5-minute or a 10-minute, maybe even a 15-minute. Just depends on how quickly it wants to form. Bullish engulfing candle, or a candle with a wick on the bottom. Okay. And then have some strong volume spread analysis activity picking up, and volume, trading volume. Okay. So that would be everything. Okay. My requirements for me to get into this potential trade. If I don't get it, I just let it go. And then we just wait for another potential play on silver. Same thing with gold. So that's basically it. As far as top setups go, where am I at on here? 32 minutes already? Okay. I think that was the main things I wanted to show. I'll share more about these top setups in the morning. I just didn't really have any great plays right now. It's all about, for me, again, monitoring my my Aussie dollar trade, which I failed to get in on my demo account, but I do have it on my other 2 accounts, so no worries there. But oh yeah, and then one other thing I wanted to mention, we did have finally, for the first time, our COT report come out without any more delays. So let's go take a quick look at that. Let's see, I got to go to sentiment, latest COT report, and let's just see what the big banks and institutions bought and sold last week. Look at that. Dow is number 1. Okay, 9%. So they're up to a net long percentage of 57.8% to their 42% short. So they're net long. But a big change came from this last week. Now, remember, we don't have a bullish setup on the Edge Finder yet. It is still down there at a +4. So it just needs one more good report, in my opinion, to come out from some of these inflation numbers, or, obviously over here, you'd want to see negative inflation. Okay. Because again, that's for the stock market. So if we get some cooler CPI numbers on Tuesday, then I could definitely see the indices jumping back onto the bullish list, because this is a really good number, 9%. Hell yeah. Look at that. They added 4,600 long contracts last week. And they only added 27 short contracts, okay, as a whole. So that's a pretty bullish signal if you're a Dow trader and you're looking intra-week, right? I like it. And then other than that, the currency that was the strongest, or that was increased net long the most, was the New Zealand dollar. Okay. Do I have New Zealand dollar on any of my pairs? I do. Okay. New Zealand dollar longs, New Zealand Swiss longs. Okay. Makes me wish now I was in New Zealand long instead of the Aussie dollar. I mean, I still like the Aussie dollar. I'm getting a bullish signal, but New Zealand dollar was the most, the best longed individual currency. What about the Aussie dollar? Okay, Aussie dollar was a very modest 0.75% increase, so it definitely doesn't hurt my long position. It doesn't stick out like a big thing either. 0.75. I mean, that's okay, but New Zealand dollar, we might as well take a quick look at that. from the chart perspective here. See what we got. Come on. Okay, so yeah, when it comes to the New Zealand dollar, we had bounced into a daily demand. It rejected. We bounced to the daily again, rejected, and now we've gotten deeper into the daily. Now, since we got into a little bit deeper, we actually bounced into a smaller time frame demand down here, which is 2 hour. I believe it was 2 hour. So here's what we're looking at. We're looking at this demand zone right here. Now, should I be excited that it hit it? Not really, because if you take a look at the volume spread analysis candles down below, they're blue. Blue means boring. Blue means just not a ton of trading activity. But what I do like about this spot is if you look to the left and down, I've got a 2 hour demand zone over here with a lot of trading activity. Okay, let me move my picture out of the way over here. Okay, you guys see? You guys see these candles? That's nice. That's what I like to see right there. That's exactly what I like to see. Okay. So, and the other thing too with this demand zone is the fact that if we're looking at this point here, these traders right over here, okay, again, just ahead of this demand zone I'm excited about, you had buyers there. So they put their stop losses where? Underneath their entries, likely down here where these unfilled orders are. Okay. Same thing with where we're at currently. You've got buyers over here. Okay. And we just missed. Let me zoom in. We just missed hitting that demand zone underneath, did we not? Look at this wick. So far, okay, you got buyers here that bought this area and they put their stop losses down here again, right inside of that 2 hour demand zone, where we also have some stop losses in this area as well. So I have an alert set at the proximal line of this 2 hour daily demand, 2 hour demand zone as a potential buy on the New Zealand dollar. Now I'm in the Aussie dollar, so I don't know if I'm going to want to double up risk on the US dollar itself. Okay. In other words, selling the dollar on two different assets, but we'll see. We'll see what happens. I mean, I got to say, I don't really like having all these wicks up here. Let's go down to a smaller time frame. Yeah, I don't know. We'll keep an eye on it. Maybe I'll get in a small position, kind of like dip my toes into it, and then we'll evaluate the Aussie dollar further to see if I want to stay in that or switch it over to the New Zealand dollar. But that's partly because the banks increased their net long percentage on the New Zealand dollar. That's nice. That's a really good, that's a really good sign. It's not the end all be all. The end all be all is a collection of everything over here on the Edge Finder. Okay. But yeah, I think that's pretty much all I wanted to go through today. I'll get this uploaded. As always, guys, do make sure you go and follow my channel over here.
My first 5 shorts.
And you'll find my lives in here. Okay. At Trade Like a Tiger. Why is this going so slow today? I don't know why it is. Okay. And then here's my lives. Okay. So here's my live for tomorrow, January 12th, episode 2 on my solo project. Okay. My solo stream. So please do come and see me. One other thing of note, on Tuesday I'll stream as normal. Okay. 6:30 to 8. But then at 8:30 my time, 8:30 Central, I am actually going to be appearing over here on Trader Nick's site. Okay. Go back to Trader Nick, who's the one that developed the Edge Finder, okay, and the stock box, by the way. I'm actually going to be over here appearing on his live. Okay. That'll be Tuesday at 8:30 a.m. Central Standard Time, or 9:30 if you're over on the East Coast. So yeah, definitely come and check me out on both those. That'll be fun going on there, and very much my honor as well. Because again, he's the one single-handedly that's kind of helped change my trading around just from using the Edge Finder. So at Trader Nick on YouTube, go give him a like, a share, a subscribe as well. And yeah, I think that's about all. I should be a 30-minute segment on his, from what I understand. But yeah, I'll just go over there and just kind of be a testimonial for their traders that he's got over there. Because this is I'm telling you, this thing will change your trading life. Not to be dramatic, but it will. Okay. Fundamental sentiment analysis is what makes the world go round. Technical analysis, the charts, this is where we go and time it. That's all I got for now, guys and gals. I'll see you bright and early at 6:30 a.m. Have a great rest of your Sunday, and holla at your boy.